Welcome to the Limit Up Weekly Capital Market Podcast. My name is Don Collins. I'm a Chartered Accountant and Business Advisor of 30 years and a partner at Findex, leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder.
Morning, Don.
Good morning,
Evening,
Ian.
Don. Afternoon, Don. Whatever it is.
Welcome.
Yes, thanks.
So today we're going to cover what happened the last week, where Bitcoin got smashed, where equities had a bit of a wobble, where gold and silver has consolidated, and all eyes will be on the Federal Open Market Committee final meeting in December.
That's right.
We will review the trends, especially in the USD and the yen as they continue to go higher, especially the Japanese yen yields continue to grow, and the S&P 500 wobbles, but check on what happens with the Dow Jones. Might get you to talk to those things before we cover what's up for the next week. So over to you, Ian.
Yeah, so just a bit of a breakdown. Bitcoin got absolutely poleaxed last week. Lots of big positions moving. You can tell that by the price action, i.e. the bids don't get hit, but the offers build, because when you've got, and I know this from experience, too many things to get rid of, you don't want to panic the market.
No.
So if you put in an offer and someone pays the offer, you try and build on the amount.
Right.
But if you go and splatter it all over the street, everyone loses.
Yes.
So a lot of that, just again. We go to the charts, reached a really interesting level.
Yep.
But the narrative change in Bitcoin is real and troubling.
Yep.
Firstly, quantum computing is now near, or in the mindset of some people, it's near.
Right. And what gives you, that thoughts around that?
Because it's now very much front and center of the narrative.
Yep.
When you ask a Bitcoin person, they go, "Oh, it doesn't matter because if you can break the cryptography of Bitcoin, then everything else would be broken as well." But that's no answer.
No.
If you're along with Bitcoin and the market's going to zero. So that's no answer. So we're kind of like almost post AI in the market now.
Right.
We've seen all that. We haven't necessarily seen the outcome of the bubble.
No.
But we're post the revolution of it.
Okay.
And we're into the implementation. And you see how the big investors are now moving into Google with their massive audience, doing much better than the people that, like OpenAI, that are continuing to build new products with a market they don't have yet.
Right.
So
they're using the technology to gain their own business advantage at the end of the day, is where we're now at, as opposed to just building the AI itself to get to that point.
Exactly. We have use cases, and now people with wide platforms like Google can prove that they can get revenue out of it.
Yep.
Rather than just spending money.
Yep. Okay.
So that's another thing is MicroStrategy, which is a Bitcoin treasury, doing really badly. Lots of leveraged positions in there. It's not a good act. There's a big battle between JP Morgan and the Bitcoin community. Go read about it. It's too long to duck here.
Yep.
But just a whole narrative shift in that Bitcoin, is it the fastest horse in the race? Probably not now.
Right.
And have stable coins actually taken over the use case of Bitcoin?
Okay.
I don't think they have at all.
Right.
But a lot of people do.
Okay.
So that's why Bitcoin changed narratives. Equities, have we seen the top? Who knows? Price action is overall neutral but volatile. Gold and silver's run has consolidating or is consolidating. And really, everyone's eyes are on like you said, the FOMC meeting on 10th of December, where the board seems split, and any outcome is a bad outcome.
Right. Okay. And at this time of the year, is it more than that, or are we talking a longer term signal out of that?
Well, it is kind of like the final one for the year. So this is the statement for a long time, because I don't think unless there's emergency, they'll be meeting till February.
Yep.
So either inflation is going lower and you can cut rates, which it doesn't seem to be.
No.
Otherwise, you should be hiking rates, shouldn't you?
Right.
and you shouldn't be doing QE in that either.
No, not if you're hiking rates.
So if they cut and
Mm.
they do QE, then surely the economy must be falling over. But it seems it's running at a 4% GDP according to their own numbers.
Right. Okay.
So at the end of the day, the markets just say, "I've had enough."
Yeah. And so does that meeting set the trend for the next 12 months?
It'll certainly set the tone, and it gives some very dangerous directions to other central banks, like the RBA.
Yep.
Where inflation definitely is not under control.
Yep.
And Canada.
Yep.
Very difficult for them not to cut as well.
Sure.
Because their economy has to compete against the US economy.
Yep.
So a wrong move here, and literally everyone loses.
Right.
Or a right move here.
Yes.
Or a lot of people lose.
Interesting. You would think that they are making decisions for their market, but obviously it has implications much broader than that.
And much more broader than even you're saying, because they are the owner of the reserve of the world.
Yep.
They export dollars for everybody else to use.
Yep.
And in times of emergency, they will provide dollar swap lines to those other countries in the case of a run on their currencies, like they've just done with Argentina.
Right. Okay.
So those swap lines have been taken away from the Fed and now at the Treasury.
Yes.
So it's now politicised.
Yes.
Saving countries whose currency needs propping up.
Right. Okay.
And you can see another country can't win, because if a currency gets devalued because the dollar's strong and Trump accuses them of manipulating their currency,
yes,
well, they have to use dollar swap lines and beg Trump to help them out, right?
Yes.
So no one wins.
No.
Not even Trump.
No. Although he would prefer to be in that position.
I'm not even sure he understands what that position is, to be honest.
Right.
He just thinks about power.
Yes. Okay.
So lots and lots of narratives going on.
Okay.
Markets in the mood just to shut down for Christmas, I think.
Yep.
But unlikely to get the reprieve.
Okay. Would you like to go through the charts?
Here's Bitcoin last week.
Yep.
Actually, last 2 weeks.
Yes.
Or even 3 weeks or a month. And it's behaving quite nicely. And then it's not behaving very nicely at all.
Yes.
Completely overshot.
In the last 2 weeks.
In the last 2 weeks. Around here, lots of leverage was taken out. Supposedly, some of the market makers got loaded with a whole load of stock they can't get rid of. Right. They've just been getting rid of it. It's post the halvening, so the rewards, the halving.
Yep, which occurred when?
May.
Yep.
Where so since then the rewards to the miners have been cut in half.
Yep.
And they can no longer hold on to their stock they've mined with the price going down 31%.
Right.
So all of these things, along with what I was saying earlier, have added up to Bitcoin getting absolutely hammered.
Yep. Okay.
But as you can see, it's having a nice bounce today. We'll see where that goes. But
yep.
If you want to have a look at a real analysis of Bitcoin, let's have a look at the monthly chart.
Yep. That will be an interesting ride.
It's much easier on the monthly chart. If I can find where it is, on again. You can see when we zoom out a bit, that actually it's been quite predictable. Let's bring it back a bit. So let's look at it, the whole history of Bitcoin. So before 2017, that's naught the price, effectively.
Yep.
And we've had our 4-year cycle highs here and here. And have we had it here? Who knows?
Right.
But we seem to be trading a different pattern now. And if I'm right with these parallel charts, it's a bargain buy about now.
Right. So your expectation it will rise again?
Chart's expectation
is
it will rise again.
Yes.
Unless it comes down here and confirms it's lower.
Yep.
Then that's right. The risk reward is to the upside at the moment.
Right. Okay.
Gold has been very much consolidating in our red wedge here, waiting to gain energy to break higher. Same, almost identical actually with silver. With silver, we're at $50.
Yep.
Third time in history it's been there, but we're sort of chilling at that level,
Yes.
which suggests to me that it's going up. Not yet, though. Possibly after Christmas. Oil's been quite interesting, but without necessarily a conclusion for the moment.
Right.
In that this is called a cup and handle, and it's a continuation pattern. So it should. There's a handle. It should go up.
Right.
But it's been held up by geopolitical events recently.
Which events are those?
Well, the events of Israel,
Yep.
Iraq,
Yep.
all that stuff from a few months ago. And really, if you look here, a break lower is going to see price significantly lower, down to like $35.
Right.
And normally that's something that happens when US Chinese economies are very weak,
Yep.
because they're consuming oil.
Yep.
And OPEC's churning out like crazy to try and break the frackers in the US.
Yep. Yep.
And all that sort of stuff. Anyway, so that will reach a resolution pretty soon, I suspect, because it can't keep going below that low before it becomes something else.
Right.
Dollar yen position, which is one of the few positions we got at the moment, that's doing really well. So you can see where we bought it.
Yes.
Didn't need to put that on there, but now you know. So the yen is weak because the new Japanese Prime Minister has already got legislated a package of stimulus for the people of Japan. It's suddenly in a war footing with China, or much more than it was before.
Right. And what signs do you have of that?
War footing.
Yes.
That island that you told me about?
Yes. The one near Taiwan.
The one beginning with Y, yeah.
Yes.
So really near Taiwan, like literally you can see it. They've sent a load of missiles there. Japan has more US military bases than anyone else.
Yes.
China didn't like that. Started doing things, saying things. China's kind of boxed in, but when you box people in, unpredictable things happen.
Yes, correct. Because no one likes being boxed in.
That's right.
Yep.
So especially when it's geographically.
Yes.
So that's yields are still rising, which we'll look at in a minute. And
Yep.
until those yields rise to the point where someone wants to buy it, the currency is going to keep going down.
Mm-hmm.
Thing is, I'm not sure there's any sort of yield which people will buy for Japanese government bonds, because the Bank of Japan owns most of them.
Right.
So it's not really a market.
No, correct.
Let's have a look at some other currencies while we're here. The Dixie, which is the futures contract to the dollar against euro predominantly, bit of yen, bit of sterling, that sort of thing,
Mm-hmm.
shows our recent rise has stopped at this pivot point around 100.
Right.
But in context, this is part of a much bigger uptrend that's been going on for 20 years.
Mm.
And, we're sort of messing around at the bottom here. So what does that mean? It means there's a big move coming, one way or the other.
Okay.
And strength or weakness of the dollar and a big move moves all capital markets.
Right. Interesting.
Here's Japanese bond yields, actually. And 10-year yields, they've just been going up. So when was it? Here. So 2 years ago, it was 0.16 10-year yields.
Yes.
With rates negative.
Yes.
And now it's 1.7.
Okay.
With the inflation at 2.6, 2.7%. It should be loads higher, or should have deflation. Can't have both.
Right.
So that's why the yen's going down, because there's nothing really logical about its monetary policy, fiscal policy. Let's have a look at stock markets, because despite all the naysayers, it hasn't gone down. Okay, it's gone down a bit.
Depends which time frame you look at, is it?
Well, this is just the daily. and that's the all-time high. It's not much lower than the all-time high, 5%. This has been the channel that's been driving it higher, broke higher, probably coming back to revisit it and then go higher, all things being equal. That's the NASDAQ. The S&P is exactly the same, but has actually hit the line. So it's decision time.
Yep.
And there's even been could be of action in the Dow Jones, where you can see this decision more clearly, I believe, in that you have had the horizontal support here and you've had the uptrend channel.
Yep.
And we've broken back here, and now we've got to decide which way we're going. But it's increasingly volatile as it's a wedge pointing outwards.
Yep.
And you can track this back to 1910, I think.
Right. Okay.
And do you know what the value of the Dow Jones was in 1929?
No, I don't.
It's very volatile.
Sure.
Let's call it 50 for the sake of argument.
Yep.
It's a lot higher now.
Absolutely.
Yeah,
would have been less stocks as well.
No, same
number.
I believe so. Yeah.
Okay.
Different ones.
Yes.
I think.
Yeah. Yep.
Yeah. Still 30. Crazy. Right. That's about it for the week with the charts.
Okay.
We'll stop sharing.
Yep.
And really, that 10th of December is what we're looking at. We're going into Thanksgiving on Thursday, so markets will want to be quiet. There is Mr. Best that was telling us about a potential US-Chinese trade deal this week.
Okay.
Whether that comes off or not, we'll see. And what it actually looks like when anybody actually believes it's a different matter.
Yes.
We've got a whole load of US data still coming out after the government reopened. Market's not interested in it because it's all rubbish.
Yes.
And probably won't be interested in it going forward, seeing it's rubbish.
Right. Okay. And that part of that data is the consumption expenditure index, so the US inflation indicator.
So the PCE, personal consumption expenditure index, is what the Fed looks at when it makes decisions, supposedly.
Yep.
So we'll see where that comes in. Conveniently, that's Wednesday, so before Thanksgiving.
Yep. And
Chairman Powell just announced via Barclays that he was in favour of cutting rates.
Right. Okay.
So you can be assured that rates are going to be cut, whether they should be or not.
Yep.
And QE is being lined up for the 1st of December when they finish quantitative tightening.
Right.
It's absolutely for sure.
Okay. Interesting week ahead of us then.
I think it's actually going to be boring because we're not at the first yet.
No, that's right.
And Thanksgiving is first.
Yes.
But next week's going to be really volatile.
All right. Well, look forward to next week's update and the trend ahead of that.
Awesome. Thanks, Don.
Thanks, Ian. All right. Bye.
Cheers.
Thanks, everyone.